Bismillahirrahmanirrahim. In the previous class, we finished that chapter. This is the fourth week. In this today's lecture, we will discuss statement of cash flows in detail. Previously, just it was theoretical. Now we are going to solve one question of statement of cash flow. Now you know about statement of cash flow. The balance sheet indicates the amount of cash owned by the business at a particular date. You know, in balance sheet there is an item that is called cash, which is derived by preparing cash flow statement, and that item of cash, it is coming from the statement of cash flow. Keep in mind this thing. You know, there is cash, account receivable, note receivable, land, building, furniture, and all these things. So the item cash, it is coming from statement of cash flow. A separate financial statement called the statement of cash flow, summarizing all the cash activities, that is inflows and outflows, during a specific accounting period. So statement of cash flow, it is a statement that shows the inflows and outflows of cash during a specific time period. Now we discussed about this classification and parts of statement of cash flows. There are three main parts of the statement of cash flows, three components of statement of cash flows. We already discussed about this. The first one is operating activities, main operations of the business. The second one is investing activities, that investment in and divestment in assets. And then the third one is financing activities, investment in business itself, loan and capital. We discussed about this in detail. Here, now we will check that which things are coming in operating activities and which things are coming in investing and financing activities. Now in operating activities, cash inflows are sales of goods or services and other operating receipts. If there are some other operating receipts, commission and these things, so that is cash inflow. Now take the example of Salam University. So their operating activities, it is basically inflow. I'm talking about the inflow. So the student fees, it is one of their cash inflow, and transportation income of the Salam University, that is another operating activity of Salam University. Now, which things are coming in cash outflow? Payments to suppliers, those people from whom we are purchasing the raw materials, and if that is a trading business, so we are purchasing inventory. Payments to employees, salaries of the employees, that is an item of cash outflow. Payment of interest and taxes. Now keep in mind this thing. Payment of interest and taxes, it is coming in operating activity. Keep in mind, this interest and taxes, it will determine our net income. That's why it is coming in cash outflow of operating activities. Whenever you're making the income statement, sales, cost of goods sold, so we are getting gross profit, then selling, general, admin expenses, then we are getting EBIT, we also called it operating profit. Then we are deducting interest. So we are getting EBT. And then we are deducting taxes. So we are getting net income. Now see, this interest payment and this taxes, it will determine our net income. That's why we are including these two items in operating activities. So that thing which will determine your net income, it will come in operating activity. Okay. And other operating payments, any operating payment, rent, the what you people call it, the stationery, whatever that is, electricity, telephone expenses, all these are coming in operating activities, and that will be cash outflow. Transactions generally involving producing and delivering goods and provision of services. So in operating activities, it includes what? Production, producing something, that is manufacturing, and delivering goods, that is trading business, and provision of services, like a business is providing services to anyone, like Salam University is providing services, so that will come in operating activity. Now, what are the expenses of Salam University? Cash outflow. We are talking about operating activities. So now in this, they are paying salaries to the employees, they are paying rent of the building, they are paying the food expenses, they are paying the electricity bill, they are paying the telephone bill, they are paying other small expenses. So all these are coming in their operating activities. Now in investing activities, so cash inflow in investing activities, sales of property, plant and equipment. When the business is selling their property, they are selling land, they are selling building, they are selling plant and equipments. So by selling something, cash is coming to the business. So that is cash inflow. Sale of stocks and bonds. Suppose they purchase stocks and bonds, and now they are selling these stocks and bonds. When they will sell stocks and bonds in the stock market, so there will be a cash outflow. See, this is company. They invest money in the stock exchange. They purchase, suppose, 10,000 shares. Now what are they doing? They are in need of money. Now they are selling these shares. When they will sell these shares, now cash will come into the business. So that will be what? And a cash inflow item of investing activities. Repayment of loans. When they will repay loans, so cash will go out of the business. There will be cash outflow. Receipts of interests and dividends. Now keep in mind, when they will invest in stock exchange, they will purchase bonds and shares. Suppose this is Salam University. They have excess cash. So what they did, they purchased bonds and they purchased shares. Now on bonds, Salam University will receive interest. So that is cash inflow. And on shares, these shares, they will receive dividend. So that will also be a cash inflow. So he's talking about this thing. receipts of interest and dividends. So cash will come into the business. Now what will be cash outflows by investing activities? Purchase of property, plant and equipment. When they are purchasing property, when they are purchasing land, building, furniture, equipments, whatever. So for that, they will make payment. When they will make payment, cash will go out of the business. So there will be cash outflow. Purchase of stocks and bonds. When they will purchase stocks and bonds, so they will make payment for the purchase of stocks and bonds. So now cash will go out. When they will sell stocks and bonds, cash will come into the business. But when they will purchase stocks and bonds, so cash will go out of the business. Purchase of infrastructure, any type of infrastructure, when they purchase, so cash will go out of the business. Involves buying and selling non-current assets and securities, giving out loans and collecting on them. So here the main thing is the purchase and sales of fixed assets, securities, giving out loans. When they are giving loan to someone, so they will receive interest on that, and collecting on them. And when they are collecting that loan, so that will be investing activities. The third thing is financing activities. So in financing activities, there will be cash inflow, there will be cash outflow. Cash inflow will be issue of stock capital. When the company will issue shares, cash will come into the business. Investment by owners, when investors, they will invest in the business, so cash will come into the business. Suppose you have a business, an owner is bringing fresh capital to the business, so there will be a cash inflow. Issue of bonds, when company is issuing bonds, in that case, they are issuing bonds, cash is coming into the business. Loan borrowings from bank, when they are taking loans from a bank, again, cash is coming into the business. Dividend paid to owners, when they will pay dividend to owners, so there will be cash outflow. Buyback of shares, when they will buy back shares, there are some type of shares that company can buy these shares back. So the purchase of these shares by company, so when they will purchase, they will make payment to the shareholders, so cash will go out. Repayment of bonds, at maturity, you will repay the bonds, so again cash will go out of the business. And repayment of borrowings, when company take loan and now they are repaying that loan, so cash is going out of the business. Involves obtaining resources from owners and providing return, obtaining borrowings from creditors and repaying principal amount and cost of borrowings. Now here, all the sources of financing, all finances that we are getting from either shareholders, from either bondholders, or from bank. And then the repayment of these financing sources and the cost of these financing. When we are paying dividends and when we are paying interest is coming in operating activity, so interest will not come just. So three things: shares, bonds, and bank loan. 1, 2, 3. When they are issuing shares, when they are issuing bonds, when they are taking loans, there will be cash inflow. But when they are repaying this money, so there will be cash outflow. And the other things, on shares, they will pay dividend. So dividend, it will be financing activity. But on these bonds and bank loans, when they will pay interest, that will not come in financing activity. That will come in that interest payment, it will come in operating activity. And I told you about the reason, because it will, when we will calculate the net income in the income statement, so from net income we are deducting taxes and we are deducting interest. So that's why for calculating the net income, we first deduct the interest, then we deduct the tax payments. So because of this thing, because of these two items, they are deciding our net income, and all those items which will decide our net income, that will come in operating activities. So now we will take an example. Suppose there is a cash sales of 10,000. So what will be this? Operating activity, financing activity, investing activity. So cash sales, it is operating activity. So, okay. Depreciation. Keep in mind, for depreciation, we are not making any payment. We are just deducting this amount that the value of building comes down. So if something you are not paying, so that will not come in cash flow statement. Why? Depreciation, for depreciation, we are not making any cash payment. So it is non-cash payment. And in cash flow, we are concerned about the cash inflow and cash outflow. And in depreciation, we are not making any payment. So it is non-cash flow item. So we will not include this in our cash flow. Salary paid. So when you are paying salaries to the employees, so that will be our operating activity. Interest on calls in arrears. Now what is this basically? Suppose this is company and this company is issuing shares. Some companies, they are receiving the money from the shareholders in installments. Suppose the price of share, it is $10. Now you know there is a complete process of issuing shares. Shareholders will give application to the company, and then company will decide whether to issue shares to this shareholder or not. Now suppose there is a shareholder, this one, Mr. This. And this Mr. This, the company told him to make payment, but he didn't make payment. So there will be hundreds of these people that the company told them that make payment for your shares, but they didn't make payment. Suppose there is one, this. So when they didn't make payment, now after some time they make payment. Suppose they are 3 months late or 4 months late. So on that money, what we did, we received interest and the principal payment. We told them that you will make the principal payment plus you're 3 months late, so you will also pay the interest on that money. So this is basically, we are receiving what? We are receiving finance from these shareholders. So it will be a financing activity. Some shareholders didn't pay money, so interest on that money. It will be what? Financing activity. Some shareholders, we told them that make payment, but they didn't make payment on time. So now on that money, we are charging interest plus the principal amount. Interest on calls in advance. There are some good shareholders. They are making payment in advance. When they are making payment in advance, so that is also what? That is also financing activity. Brokerage on sales of machinery. When you are selling machinery, so that is basically what? Sales of fixed asset. I told you it is investing activity. Payment to creditors. So it is payment to creditors. It is basically what? From creditors, we are purchasing what? Inventory. So payment for inventory, it is what? It is operating activity. Issue of shares against the purchase of building. We purchased a building, and for that purchase of building, instead of cash, we give them shares. We give them what? Shares. We didn't pay cash. We give them the shares that we held, that we purchased. So in that case, there is no cash payment. So it is non-cash item, non-cash flow item. It is not affecting our cash flow because we didn't make cash payment or we didn't receive cash. Tax paid on dividend. When you are paying dividend, so dividend is coming in financing activity. So the tax paid on dividend, it will also be a financing activity. Interest received by mutual fund companies. Now, you know, in investment, we studied about mutual funds, that mutual funds, their main business is what? Investment in securities. So their main business is investment. So when these mutual funds companies, when they will receive interest, so it will be basically their operating activity, because their business, the business of mutual fund companies, it is purchase and sale of bonds and shares. So it will be an operating activity for these businesses. TIES, sorry. So these will be operating activities. So this is what this is. These are some items, and I told you that they will come in which category. Now here is an example of Universal Pharmaceutical Industry statement of cash flow for the period ended December 31, 2011. Cash flow from operating activities first. So cash received from revenues 8,000. Cash paid for expenses, all expenses 2,000. Net cash from operating activities, so 8,000 minus 2,000, so net from operating activities it is 6,000. Cash flow from investing activities, so in investing, purchase of land and building, so they paid 50,000. Payment for the purchase of tools, they purchased tools, so they paid 6,000. Collection from sale of vehicles, they sold some vehicles, so they received 10,000 for that. So net cash used by investing activities, so see 50, 56 minus and plus 10,000, so it is 46 minus. You know about the calculation. 50 minus 6 minus, cash is going out, so 56 minus and plus 10,000, so it will be 46 minus, means minus 46,000. Cash flow from financing activities. Now in financing activity, just we have investment by owner. He made an investment of 80,000. There is no other item. So movement in cash position during the period. So see 6,000, 80,000, 86,000 minus 46,000. So we got 40,000 net amount. See 3 items, 1, 2, 3. So these two, number 3rd and number 1, these are plus items. 6,000 plus 80,000, so it will become 86,000 minus, there is a negative cash flow in investing activities, so minus 46,000, so we got 40,000. Now cash beginning balance, January 1, 2011. At the beginning, at the start of the year, our cash balance, it was 20,000. So now what will be our total balance of cash? 40,000 plus 20,000. So we got 60,000 cash ending balance December 31, 2011. So it is 60,000. So this is all about the cash flow statement. If you got some confusion, so you can ask questions. This is a class activity. During the month of January 2001, Foster Company had the following transactions. Revenue were earned and received in cash. Expenses were paid. Equipment of 2,500 was purchased. Bank loan of 2,000 were paid off. The owner, Doug Foster, invested an additional 5,000 in the business. Assume that the cash balance at the beginning of the month was 5,600. Prepare a statement of cash flow. So this will be your homework. You will prepare this and then you will send it to me. And also this question. You will solve these 2 questions. So this will be this is your assignment, both for male and female. Inshallah, make this assignment and submit it in the LMS within, today is Wednesday, so next Wednesday inshallah you will submit it. You have 7 days for the submission of this assignment. 2 questions, so you will solve these questions. Okay, I think for today it is enough. Inshallah, in the next class, then we will talk about other things. Assalamu alaikum.